Hello, very warm and divine greetings of the day to all of you. I know it's actually getting very cold and intense chilly weather is here, but still I'm conveying warm greetings because I wish all of you to take best possible care of yourselves by keeping yourselves warm and cozy by wrapping yourselves in the warm clothes because actually it's the call of nature with the increasing chilly weather, with the falling temperatures, you need to take the best possible care of yourselves to insulate yourselves very well from this extremely chilly weather. So here is Kunal Nagpal, and I feel immense pleasure to welcome you to this economic platform. And today, my dear friends, we are going to have a multifaceted discussion on various parameters, be it the Ukraine-Russia war, which is actually getting intense and more sensitive times are approaching. So we are going to have the overall statistical analysis, and this analysis is going to be really heart-wrenching. That is the extensive loss it has been causing to the lives, to the innocent lives, to the livelihood of people. Along with that, the turmoil it has been causing globally in terms of the economic parameters, in terms of the supply chain disruptions and the overall volatility and uncertainty it has been causing, which is leading to a lot of upheaval, and actually a global earthquake is happening. Yes, my friends, you have heard me right. It's a global earthquake, and all of us are aware of this particular fact. We have been discussing in our sessions about the detailed analysis of the extensive loss it has been causing to the economics of the entire globe. So it's actually the call of time to stop this war as soon as possible. Both the regions should engage in dialogue, and that's what we have been suggesting to them. And that's what most of the countries across the globe have been suggesting. Trying to convince both regions, Ukraine and Russia, to settle the differences and engage in the diplomatic dialogues with each other. And that's actually the call of time. Before the nature of this war turns into nuclear, it would be really devastating if it turns nuclear. Yes. So let's have a broad look on the overall statistical analysis. The Ukraine war toll. In 312 days since the Russian troops entered Ukraine, that is, since the commencement of the war on 24th February 2022. Since then, nearly 7,000 civilians have lost their lives. The innocent civilians have lost their lives according to the data available with the United Nations OHCHR. Most of the civilian casualties, including those injured, were caused by the use of explosive weapons, including shelling from heavy artillery, multiple launch rocket systems, missiles, and airstrikes. This is really heart-wrenching to read this news because this is the loss of innocent lives who are losing their lives for no reason actually. So at least on humanitarian grounds, this war should stop. So the only objective for presenting this statistical analysis is just to remind the people across the globe, and especially for the people residing in Ukraine and Russia, that this is the wake-up call, guys. This is the wake-up call before it gets too late. Before it gets too late. So the total civilian casualties in the period of February 24, 2022 to January 2, 2023, The total number of civilians killed are 6,919, of which 4,062 were killed in Donetsk and Luhansk, and 2,857 were killed in other regions, and the total injured are 11,075. And the refugees from Ukraine recorded in Russia have been 28,52,395. In Poland, it has been 15,46,354. In Germany, 10,21,667. In Czech Republic, 4,74,731. In Italy, 1,73,231. In Spain, 1,60,287. In United Kingdom, 1,52,200. In France, 1,18,994. In Romania, 1,06,629. In Slovakia, 1,05,370, and in others, 11,84,967. So the total refugees from Ukraine have to various regions across the globe have been 78,96,825. So you yourselves are the best judges to analyze, is this situation favorable? The answer is obviously no. So what are we waiting for? What are these regions waiting for? At least on humanitarian grounds, we should end this war. My pledge to the concerned persons, to the concerned parties, is to please stop this war before it gets too late. Before it gets too late. Now, my dear friends, let's discuss certain economic aspects which are vital for the Indian economy, wherein we are going to consider the crude oil economics pertaining to the Indian economy, drawing the comparative analysis with the supply of crude oil to the other countries like China, European Union, from Russia, and how is the trend different in the Indian economy if we draw the comparative analysis with these particular countries. So the top supplier, Russia, ships record 1.17 million barrels per day of crude in December. And how is India's dependence on other countries for the crude oil reducing? We are going to have an extensive discussion on this particular aspect. Along with that, for today's discussion, we are also going to discuss the trend of the Indian rupee per US dollar. That is the recent news of rupee appreciation. That is the rupee gains 23 paise to close at 82.77. That is the rupee recovered from its all-time low level of 83 rupees per USD and settled 23 paise higher at 82.77 against the dollar on Wednesday, that is on 4th January 2023, supported by the easing crude oil prices. And along with that, the other contributory factors are also quite prominent, like the RBI intervention, and also in the Asian peers, the strong dynamics have been the main contributory factors. We are going to have a detailed discussion on this particular aspect in today's discussion. Next aspect of today's discussion is the protocols and the entire framework which is responsible for the implementation and the incorporation of the green drive in the Indian economy. What are the supporting factors, and what are the certain potholes, or what are the certain factors on which we need to work in order to guarantee and assure effective implementation of the non-fossil fuels energy sources, and for making it a success in the Indian economy. So we are going to have the overall pestle analysis. The government panel to take call on minimum purchase of green hydrogen by the key sectors would be the area of concern of today's discussion, wherein the center is likely to take up an empowered committee or a group of secretaries to determine the mandatory green hydrogen purchase trajectory for the refineries, fertilizer firms, and city gas distribution companies, that is, the CGD companies. Along with that, my dear friends, in this particular drive, the granary or habitat, it's actually very delicately poised in the Indian economy. India is inextricably tied to and is critical to almost every dominant environmental discourse of international significance, be it climate change, fossil fuel consumption, biodiversity conservation, or the big green energy transition. So, before beginning this interesting discussion, I would like to again state that though these are the economic scenarios, these are the economic updates on which we are going to have an interesting discussion today. But I would like to again plead and really ask the concerned parties, request the concerned parties who are involved in the Ukraine-Russia war to please stop this war as soon as possible, because it is causing a lot of global upheaval and actually the global earthquake, causing a lot of turbulence, a lot of uncertainties in holistic view. So it's actually the call of time to please stop this war. And it has been the area of concern in every international summit being organized, in every gathering we are having. Every concerned person is suggesting the same thing, and now it's getting actually dangerous. Yes, my dear friends, it's actually getting dangerous with each passing day. Now, my dear friends, let's begin with today's economic discussion. So, the first news for the economic discussion is the crude oil economics pertaining to Indian industry. The top supplier, Russia, ships record 1.17 million barrels per day of crude in December. Every fourth barrel of crude imported by India in December came from Russia, according to the energy cargo tracker Vortexa. Russia remained the top exporter to the country for the third month in a row in December 2022, supplying 1.17 million barrels a day of crude, a record. This was actually 24% higher than the imports from Russia in November, aided by a three-quarter rise in imports by the private sector refiners. The imports of Russian crude by the state-run refiners remained nearly stable at around 6 lakh barrels per day, while those by the private sector refiners rose to about 5,70,000 barrels per day. India's overall crude imports rose 7% month on month to 4.6 million barrels per day. Imports from Iraq and UAE fell marginally, while those from Saudi Arabia rose marginally. the US exports to India fell by a fifth. India's imports of the seaborne Russian crude were 50% more than China's and 9 times that of the European Union's as the latest ban on imports from Russia kicked in on December 5. For the first time, yes, my dear friends, for the first time, India's imports of Russian crude exceeded that of China's, which fell 27% month on month to 770,000 barrels per day in December. And now, in this particular discussion, we are going to analyze the core factors responsible for this particular trend. That is, the factors which were responsible for the reduced dependence of China on the import of the crude oil from Russia. We are going to have the detailed analysis in this particular aspect as well. The difference in shipping time helps explain the diverging trends between Indian and Chinese imports. For India, the main grade that is imported is Urals, which takes about a month from Russia's Baltics and Black Sea to India. This means that the December arrivals into India were loaded in November before the European Union ban kicked in, said Ms. Serena Huang, an analyst at Vortexa. For China, the main grade that is imported is ESPO blend, which takes about 2 weeks from Russia's Cosmino to China. While some of these cargoes loaded in end November, the majority of them loaded in December and could explain the hesitation for the Chinese traders or refiners to purchase them after the European Union ban was implemented, she said. The surge in the number of COVID cases in China has dampened the domestic demand and in turn the margins, which may also weaken the buying appetite from Chinese refiners, Ms. Huang added. India's imports of Russian refined products also rose by a third from the previous month to 153,000 barrels per day in December compared with China's 150,000 barrels per day. The European Union's imports of Russian refined products jumped more than 6 times in a month to 993,000 barrels per day. The European Union embargo had a limited impact on Russian exports in December. Loading of crude at the Russian ports fell from 3.17 MBD in November to 2.71 MBD in December, down 14%, but much lower than the market expectation of a decline of 1 MBD. Nearly 280,000 barrels per day of the Russian crude oil loaded in December does not have a firm destination yet, which means they could still be looking for the buyers. It remains to be seen whether the friendly countries will be increasing their uptake or if the new buyers will emerge, Ms. Fang said. The group of 7 nations imposed a price cap of $60 per barrel on the export of Russian oil on December 5, barring its shippers, insurers, and financiers from backing any deal struck between the two parties above the cap. So, a 45-day wind down period has been given for the Russian oil purchased above the cap, provided it was loaded before December 5 and unloaded before January 19. So after this detailed analytical discussion of the crude oil economics, we would like to proceed towards the rupee trend in terms of USD. And as we had discussed, the rupee gains 23 paise to close at 82.77. The rupee recovered from its all-time low level and settled 23 paise higher at 82.77 against the USD on Wednesday, that is on 4 January 2023, supported by easing crude oil prices. The forex traders said weakness of the greenback in the overseas market, strong Asian peers, and suspected intervention by the Reserve Bank of India also helped the currency. However, sustained foreign fund outflows and a weak trend in the domestic equities restricted the appreciation bias to some extent. At the interbank forex market, the local unit opened at 82.87 and touched an intraday high of 82.74 and a low of 82.91 against the greenback. It finally settled at 82.77, hence registering a rise of 23 paise over its previous close. On Tuesday, that is on 3rd January 2023, the rupee had slumped 22 paise to close at its all-time low of 83 against the dollar. The Indian rupee snapped a two-day fall as the dollar index wiped out most gains of Tuesday, and crude oil declined more than 2% to the USD 80 a barrel. The stronger Asian currencies and suspected RBI intervention around 83 also supported the local unit, said Mr. Dilip Parmar, research analyst, HDFC Securities. The dollar index, which gauges the greenback's strength against a basket of 6 currencies, declined 0.52% to 103.97. On the domestic equity market front, the 30-share BSE Sensex declined 636.75 points or 1.04% to end at 60,657.45, while the broader National Stock Exchange Nifty fell 189.60 points or 1.04% to 18,042.95. The global oil benchmark Brent crude futures fell 2.13% to $80.35 per barrel. The foreign institutional investors, that is the FIIs, remained the net sellers in the capital markets on Wednesday, that is 4th January 2023, as they offloaded the shares worth 2,620.89 crore rupees according to the exchange data. Meanwhile, the Indian services sector growth touched a 6-month high in December, supported by a robust intake of new work and favorable market conditions, a monthly survey said on Wednesday, that is on 4th January. Mr. Jatin Trivedi, Vice President Research Analyst at LKP Securities, said the rupee traded positive on the back of weak crude price, which has fallen 7% in the new year. This is on fears of a demand slowdown amid the recession forecasts in United States and Eurozones. Rupee weakness has been limited as the dollar price has risen and the foreign institutional investors have been the sellers as well, keeping rupee rise limited. Rupee range can be seen between 82.7 to 83.0. A break below 83.0 shall take the prices towards 83.5, he added. So now, after this in-depth analytical discussion, we switch to the supporting factors for the green drive in the Indian economy. And along with that, we are also going to consider certain setbacks on which we really need to work. And the government is working very hard on these aspects as well. That is the pestle analysis in the Indian economy, which support the successful implementation of the green drive. So, The government panel to take call on the minimum purchase of green hydrogen by the key sectors. The center is actually likely to set up an empowered committee or a group of secretaries to determine the mandatory green hydrogen purchase trajectory for the refineries, fertilizer firms, and city gas distribution companies. The committee will determine the phase-wise minimum mandatory purchase of green hydrogen by various sectors, keeping in mind the feasibility and demand concerns. Besides overall energy security considerations, ET has learned. The proportion of the cost being passed on to the end consumers will also be a critical factor. The mandatory purchase of the green hydrogen by big consumers is a major part of the government's plan to boost the domestic production and demand for the fuel. The committee is proposed to have on board secretaries or senior officials from the stakeholder ministries of power, new and renewable energy, petroleum and natural gas, steel and fertilizers, among others. Some industry experts may also be brought on board the panel, which is expected to be chaired by the Cabinet Secretary. The Cabinet on 4 January approved the 19,000 crore rupees green hydrogen mission, a key project to ensure energy transition and also the cornerstone of India's climate action targets for 2030 as well as the 2070 net zero goal. Originally, it was envisaged that the cabinet proposal itself would spell out the percentage-wise mandatory green hydrogen purchase to ensure a clear-cut trajectory for the green fuel usage and scale-up. The discussions were held on the issue and purchase obligations moving up from 10% to 25% considered for the fertilizer and refineries sector, followed by others. However, the concerns were raised by some of the stakeholder ministries. There are other challenges too. The issue of transportation and storage will require the prerequisites such as the clearances from the Petroleum and Explosives Safety Organization, that is PESO, as well as various environmental safeguards and the right of way across the states. So these are the main takeaways from this discussion in this particular aspect of the green energy drive in India, and what are the supporting factors and what are the certain factors on which we need to work for the successful implementation of the green hydrogen mission. So what are the core mission goals? At least 5 MMT green hydrogen capacity per annum, associated 125 gigawatt renewable energy capacity addition, 8 lakh crore rupees total investment and 6 lakh new jobs, 1 lakh crore rupees reduction in the fossil fuel imports, and 50 MMT of annual greenhouse gas emissions abatement. Now, my dear friends, we are going to discuss on the same grounds the core aspects of the implementation of the green drive in the Indian economy, considering the overall pestle analysis. So greenery or habitat, it's actually very delicately poised. My dear friends, India is actually inextricably tied to and is critical to almost every dominant environmental discourse of international significance, be it the climate change, fossil fuel consumption, biodiversity conservation, or the big green energy transition. As a growing India, acutely aware of the need for energy security and self-sufficiency, draws new lines on environmental issues. Each of these have turned as deeply economic as political. holding the line is already testing the country's resolve at home and on the global stage. There is actually ample evidence in the tricky ongoing negotiations on several free trade agreements where binding environmental commitments on climate action and fossil fuels are being sought from India. The Indo-UK Free Trade Agreement is actually one of them, and many others are likely to get into the green terrain. In fact, several Indian decisions on its own environmental regime are now causing the ripples on a global scale. Case in point is the genetically modified crops, that is the GM crops. So this is truly fantastic. The Environment Ministry's expert panel on GM crops, that is the Genetic Engineering Appraisal Committee (GEAC), has finally approved the environmental release of a GM variety of mustard, sparking off a debate on the subject in India. The issue has not only been raised by the scientific and agricultural community, but also drawn an RSS-affiliated Swadeshi Jagran Manch into the debate. RSS affiliate magazine Organizer recently ran a cover piece on seeds of change or disaster, revealing the different positions on the subject within the ruling dispensation. India's stand, however, has global implications. Just a few months before India permitted the genetically modified crops of mustard release, the United States had moved the World Trade Organization over India's insistence on a mandatory GM-free certificate for 24 food products. So, as India unlocks the windows to GM crops, there is the US questioning import barriers and a largely anti-GM Europe rising in caution. The matter now sub judice will test the resolve of the government as the global parties raise economic costs and elections and domestic pressure groups force open the political main fields. One of the later erupted full scale when the national capital was once again smogged by Punjab's stubble fire this November. Several districts in Punjab reported record stubble fire as Delhi struggled to breathe and the Chief Minister's constituency led the tally, Environmental Ministry data showed. The air crisis became the ground for a face-off between the center and the state, showing how quickly environmental issues can turn the political and electoral. So with the Aam Aadmi Party ruling both Punjab and Delhi, the party was left in a tight spot and assured the citizens of improvement next year, even as it accused the center of political targeting. The biodiversity conservation in the country can be equally challenging. The recent COP on biodiversity in Montreal saw India once again defend its fertilizer and crop subsidies amid mounting Western pressure. There are battles to fight at home as well, with India promising a leapfrog to renewable energy and the global stopwatch ticking on 2030 climate targets. The endangered Great Indian Bustard, that is the GIB, is the unexpected subject of an intriguing court battle which has separate ministries and many in number, states and power companies locking the horns. The vast barren spaces of Gujarat and Rajasthan, earmarked for the mega solar parks and windmills, have run into the GIB's fight path and hence seriously turbulent weather. The renewable energy projects worth several hundred crores are held up amid the case lingering in the Supreme Court, while diverse union ministries are attempting a consolidated stand that does both conservation of the big bird and an RE takeoff. The resolution is actually crucial for the global commitments India has made on the renewable energy front, and India would not want to falter, especially given that all eyes will be on India as it digs deeper to use up its vast coal reserves to fire up its power plants and meet the growing electricity demand as cities and industries expand. So, conscious of the global scrutiny, India is actually holding its own across every global forum, pointing to its low per capita carbon footprint and its duty to ensure energy sufficiency for its citizens. The Ukraine-Russia crisis has also brought home the need for energy scrutiny. At the same time, the renewable energy transition is as inevitable as is the ultimate need to phase out coal. India has time on its side and the possibility to grow in a greener and more sustainable manner, and the global north did. Comparatively, eminent climate economists like Professor Nicholas Stern have often reminded. All arms of government are working in tandem to usher in the green energy transition across the sectors. The policy frameworks to enable energy transitions from bringing in electric vehicles to sustainable housing, air pollution control missions, funding of municipalities for waste management, ban on several single-use plastics are already falling in place. 2023 has begun with India unveiling the even more ambitious plans such as the green hydrogen mission, which will open up the Indian renewable energy market in a big way and also pave the way to long-term decarbonization. So this is really fantastic, and what a brilliant start of the new year. With a pole position as it hosts G20, India is likely to showcase its green hydrogen mission, the life mantra articulated by the Prime Minister Modi ji at the Glasgow COP27, and decarbonization plans in hard to abate sectors such as fertilizers, cement, steel, long distance transport, etc. So dear friends, this in-depth analytical discussion on the overall pestle analysis of the Indian economy supporting the green drive and what are the certain factors on which we really need to work on for the successful implementation of the green energy transition, or switching from fossil fuels to non-fossil fuels for energy generation and making renewable energy a great success. Though it is already making a success as we have discussed, but to further accelerate, what are the certain factors which are needed to actually catalyze the process in a positive manner is the need of the hour. And the overall political, economic, socio-cultural, technological, legal, and ecological factors which are of core importance and actually vital for bringing this drive in India at its full pace. And what are the certain factors on which we really need to pay attention? We have discussed in detail. So, my dear friends, I would like to conclude my session here itself. I hope it has been of great enriching experience for all of you to attend this session, and I would like to discuss the core aspects of the Indian economy in detail, and we are going to discuss the interview by Mr. Satya Nadella, the very enriching and very resourceful discussion by Mr. Satya Nadella on his visit to India. So we are going to have that discussion today evening. So please tune in and listen to my economic updates, and please attend today's evening session as well, because it's really going to be very worthwhile. So on this note, my dear friends, I would like to end today's session. So I would also like to remind you guys to please subscribe to my YouTube channels so that you keep getting notified on regular basis regarding our economic sessions, and most importantly, you stay updated with the latest developments in the economic environment pertaining to the Indian economy and also the overall global economic scenario. So it's very important to stay updated, my dear guys. Thank you so much. Namaskar. Jai Hind.